right, hey guys, thanks for watching. It's been a while since we've made a video. We're trying to restructure how we make videos now, and we're trying to put out more quality content. As you guys know, we've been always consistent with our videos for the past, like, I don't know, 3 months. So we're trying to take a little bit of a step back, focus more on quality. So yeah, keep an eye on that. There's some big things that we're trying to build here. We have this already created a group on Discord that everyone can just kind of share ideas, come in and yeah, just talk, right? I mean, it's completely free. We're not trying to do anything here. I mean, nothing wrong for selling things. I mean, I think ultimately, this is also a business in some way, but we just really at this point we just want to share stuff, and we want other traders, like-minded traders, or those who are trying to learn, just feel free to get involved as well, right? And we'll try our best to sort of to shift you to the right direction. There are some great traders that we're also looking to bring on for stocks, for futures, and things like that. So definitely keep an eye on that as well, right? So but yeah, before that, as you guys know, we are macro traders, so a lot of the things that we talk about is really fundamental related. It's very dry for the most part, so those who are trying to get some quick dopamine release, this is probably not a video for you. If you want to try to get rich from some crappy strategy out there that claims that they can make millions just from looking at charts, go ahead. It's fine. I mean, you guys have to learn some way, right? Somehow. I mean, I've definitely fallen into that as well. So yeah, but those who are actually who have some understanding that trading is actually really difficult, and for the most part the real drivers are macro, narratives, fundamentals, right? Doesn't matter what asset class you're trading, it affects pretty much everything else. Okay, right? Like example, if Japan were to just increase rates to 3%, the whole entire unwind of those carry trades are going to affect global assets fully. Okay, it's going to be like max pain. All right, it has nothing to do with levels on the chart. All right, so I just would like to say that. So yeah, those who are still staying on, thanks for staying. You guys are probably going to go really far, because you guys are trying to actually learn something, and I hope that I can be a part of that journey for you guys. All right, so I'm in longs on Euro US dollar. I'm in longs in Euro JPY. I'm in longs for gold. I'm also in longs for AUD and ZD, right? So I'll talk a little bit as to why that is, and what's the plan, right? So looking at Euro USD, I might be looking for a scale in soon. Okay, we'll focus a little bit on the charts first, and then we will drop into the fundamentals, right? So Euro USD, I'm already in longs here, as you can see. I really like how it's been really trending recently. We are respecting that area of resistance. We took out this high, and now we're sort of pulling back, and we can see I have this area that I'm looking at, that I would like to be a buyer of. So while we're doing that, I'm actually gonna just pause it right here, and I'm gonna quickly take a look for a limit order here, and I'll be right back. All right, okay, I'm back. So I put a limit order right here, so we'll see if we can get that. I've also put alert here just in case, so I can see if we actually get tapped into that. But I've put a limit order right here, put my stops right below this level here. I'm trying to give it a little bit more room because yeah, there's a chance that price could sort of pull back a little bit before maybe heading higher. So yeah, I'm pretty bullish or bearish on the dollar right now, at least for now in the near term. But yeah, so Euro USD, so currently possibly got two positions opening, so we'll see how it goes. I am aiming for possibly this weekly level right here. I think there's possibly we could hit there, but I will I will have a trading stop as I move. So as price keeps moving higher, I'm just going to keep trading my stops. My initial position, you can see I have a trail stop right here. It's quite far. I really want to let it have some room, a little bit, for it to kind of just do what it wants, because this was a pretty explosive move with really barely any sort of higher low. I mean, I guess you can say there's a little bit of the higher low, but we're not really getting that deep pullback before moving higher, so it's a bit hard to really justify. I mean, we can say that we can put our stop loss here to trail, but then we get sweep and then we head higher, it's going to be quite painful, right? So I don't mind just letting this kind of do what it wants. If it does have end up stopping me out, so be it. I did sold some of the initial position right here, and so we'll see, right? We'll see how it goes from here. I'm also in Euro JPY. We can talk about that. This is a little bit more on a longer term positioning for me personally. I have been taking a little bit more swaps on this, so I'm happy that we're at least getting some movement. This is, like I said, a little bit more of a longer term position, so we'll see how it goes with that. But overall, pretty decent. My stop loss initially was right here, so it's a very big, like wide position, definitely. But I'm aiming to see if we can actually come back to this level. This range is just basically based on ranges that has broken out before. So I'm trading it based on the daily, right? So I think possibly we can get a higher move, or a bigger move. But the only thing that we have to be aware of is the intervention. So what I'll probably do is I'll probably sell some into this high here, and then let the others run and see if we can get a little bit more move on it. But yeah, we can see we already done interventions here. I believe it was this one. I'm not sure about this, but I know that this is definitely the intervention, and this is also an intervention with the US. And as you can see, it has already done nothing much. We're still starting moving higher because the JPY doesn't really have any reason for continuation, in my opinion, for bulls. It's still very weak. So AUD and ZD as well. I'm in longs. I would love to take a scaling on this, but I don't know if we'll get it, to be honest with you. But I'm kind of looking at this level right here that I drawed up, that is basically based on the fib, and also kind of that gap to see if we can kind of fill that. But I want to see if we can tap into that 38.8 38.2 level and see if we can continue higher. But right now it just looks like we're pushing a lot higher here, which is really good to see. So AD and ZD, I am taking a little bit of a higher TP here, pretty much at the highs. But we'll see if like I said, I'll trail my stops and see how it goes from there. And XAU USD, I'm not sure what's that doing so far. Yeah, I mean, it's looking pretty decent, very choppy. I wouldn't say there's a lot of move. A lot less volatility than I would expect. But I don't think I'll be scaling into this. I think I'm just gonna let this do whatever it wants, and I actually am very open to letting it just head up as high as it wants, to be honest with you. So this is a little bit kind of like a position trade, in essentially, but not any sort of like long-term positioning. I do have that on my personal account. A lot of the trades that I'm taking that are more shorter term swings are usually on my prop firm accounts, but I do have a broker account that I am actually buying gold ETF right now for a longer term move. Pretty much I'll just hold it till I don't know how long. I mean, as long as I want, I guess. But yeah, for gold, I think there's some real reason for it to come back to maybe that nice little number of 5K, which is sort of a level that everyone's watching, right? Because that round number, very clean number. And as you can see, we have been seeing some really strong movement coming into gold, and I think there's some potential for continuation, honestly. Only thing I would say is that, yeah, if you take a look at the daily, I wouldn't say that we are pretty extended from where we're buying. We're definitely buying at a premium here, but I liked how it tapped into the 100 moving average. I really liked that reaction from that. You can see also the moving averages are starting to curl upwards, and yeah, I mean, it will be really nice to see when the 50 crosses at 200 again, and then yeah, and from there we'll see what happens. That 50 crosses at 100, I think that would be very clean. We're definitely more on that bullish territory, but I like how it broke out of those moving averages and are holding it really nicely. I was also looking at it based off this daily level of basically resistance. So it was tapped a couple of times here. So I think this is a really decent level. There is a good chance that price could also come back down to this level here. That would be great. I'll take the stop and I'll rebuy again. I would love to buy at these levels. I mean, this is way better of a discount level than where I'm buying. But yeah, I took a little bit of a risk position to see, look, maybe we could see a little bit more move. Maybe we're not going to get that kind of crazy pullback and we might get another bull run again, possibly, right? But okay, most importantly, besides levels, besides technical analysis, why am I buying it? That's the question, right? Why am I buying it? Okay. So let's talk a little bit about the fundamentals as to why I'm buying this. Okay, so we bring out our terminal, and what we can see is that if we take a look at the US dollar, we're starting to see some weakness coming in, right? We've seen that NFP has been taking pretty huge miss here, plus some downward revisions as well, which is very bearish for the dollar. We're seeing JOLTS also take a little bit of a beating as well. Private sector has weakened. We can see initial job claims actually increase, which is bearish for the dollar, right? Because initial jobless claims, that means there are more jobless. There's a larger amount of jobless claims initially, meaning those who are not having jobs, who are not currently working, are actually starting to take some sort of welfare claims from the government, essentially, right, in the US. So that we see an increase in that, which is not the best for the dollar. PMIs were pretty decent, right? Still relatively quite stable. Retail sales took a pretty big hit here. GDP as well completely missed forecast. So pretty much where it was in the previous data at 1.5. Services PMI pretty decent. Didn't beat forecast, but we're still relatively elevated. I mean, we're still above that 50. But yeah, definitely we're seeing some weakness. Wage growth also took a little bit of a drop here. So yeah, we're seeing some misses coming in, right? We're seeing some weak PMIs. Or not PMI, sorry, PPIs. Unemployment rate did come down a little bit, but it was really because there was the participation rate has completely reduced by quite a large margin. So I wouldn't say that this is extremely strong, or I wouldn't say it's stable, but if you just look at the figures by itself, yeah, relatively fine, I guess you can say. Industrial production as well took a little bit of a drop here, right? So we're seeing not necessarily like an immediate bearish sign for the dollar, but we are seeing that we're not getting those crazy numbers as we once were, right? We're not really getting that pushes that we got in May and things like that. We're starting to see some weakness coming in. CPI as well. I mean, we had disinflation in June, similarly to PPI, and we're starting to see that stalling, right? Maybe we're peaking right now, right? Because we're not really seeing accelerations in inflation. PCE as well, pretty much, kind of just stalling, right? Core PCE stalling, core inflation, pretty much, a little bit more bearish from prior numbers, but pretty much came in as expected. So we're seeing a little bit of, I would say, inflation is starting to peak, maybe starting to go lower, right? Which would reduce the need for the Fed to hike rates. I mean, look, they were keeping rates on hold when inflation was pretty much just going through the roof, right, at one point. And what's any different right now? If anything, there's literally no reason for them to hike rates, right? So I think that hiking cycle is pretty much done for this year, I would say. We can also see that markets have already priced down a lot lower. We at one point we were at implied rate probability of 32 basis points this year. We have dropped to about 16, so that's pretty much almost half, right? So I think that's a pretty important thing to understand, right? Markets, institutions, things like that, they're all kind of dropping their bets on hikes. Okay, so that's not really bullish for the dollar whatsoever. Okay, so yeah, I mean, so that's partly kind of the reason. If you take a look at the euro, euro has been actually kind of getting some strength. I'm not gonna lie, right? We're starting to see a little bit of improvements in wage growth. For the most part, euro is pretty muted. I don't think there was really much going on. We can see inflation has started to rise a little bit. Industrial production came out from the negative range. Not great. I mean, still at 0%, but at least it's starting to accelerate a little bit. Unemployment did come in a little bit higher, which is not great. GDP pretty much came in as expected. We're seeing PPIs kind of came in as expected. All right, so I mean the main thing is really just your wage growth, which it can seep through into inflation. Obviously, if more people are earning, obviously that means more people can buy certain things, right? We can see core inflation has also seen some increase from expected, right? But it's pretty much still kind of flat, but we're starting to see a little bit of that increase again from where it was before, right? So I think euro has some strength, but I wouldn't say it's like the most. I wouldn't say I'm very bullish. I'm not. It's not a high conviction like euro is gonna start spiking. I think it's really moving because of the fact that US dollar is pretty much the main like focus right now. And what we can see in positioning, which I found really interesting, is that we're starting to see where was it? We're seeing a little bit more of that. We're seeing 62% longs in COT positioning, right? So there are more institutions and things like that are longing the dollar. Retails are also pretty long, are long on the dollar as well. You can see this is the retail, this is basically the the institutions and the leveraged funds, then this is retail. So you can see both of them are pretty much long together. We're seeing as well on the COT table, we can see that we're starting to get a little bit more longs come in as well. Okay, you guys can't really see. I'm just gonna move this here. Yeah, you can see it now. We're starting to get a little bit more longs come in as well. So pretty much there has been a lot more longs on the US dollar. Right, that's for sure. We can also see that interest overall has been pushing up really high, and we're starting to pull back a little bit. But yeah, everyone's kind of watching the US dollar, right? And what about the euro, right? So we're seeing euro actually the opposite. We're actually seeing a pretty strong short positioning on the euro. CUD positioning are 63% short. We're seeing, week on week, we're actually getting more bearish readings for the euro. We see speculators are basically 63% short, leverage funds are short, and crowded are pretty much 50 to 50. So I personally think that possibly with the sort of shift to US dollar bearish, at least in the near term, I think that's going to really drive possible short squeezes on the euro. I think we can see that we're still pretty net short overall, and I think there's some real possible shifts in squeezes, I think. And yeah, so that's kind of what I'm betting on, right? US dollar becomes bearish, that kind of just unwinds a US dollar bullish scenario, which would then also kind of move over to the other currencies like the euro, pound, and things like that, and that's going to create some squeezes, especially if they're more net short, right? So I hope that makes sense, but I think positioning as well is sort of showing that, yeah, there is a little bit more shorts here for sure. 4% in the 4 percentile, so it's pretty extreme, I would say. And yeah, so we can also take a look at the yen, still extremely, I mean, extremely bearish, super net short, right? I mean, this is pretty crazy, but we have seen a little bit of buying back again on the yen, possibly to the intervention risk, fears of maybe rate hikes and things like that. But ultimately we're still relatively short. I mean, I wouldn't call this any, I wouldn't be super like to say that, okay, wow, the yen is starting to really catch up. I mean, it's gonna take a bit of time, I would say. There's no real policy shift, and as you can see, the JPY is still pretty much weak. Doesn't really matter if they're buying or not buying. So, and especially if leverage funds, these are short-term trades. I mean, it could have just been an unwind or something like that, right? It's not necessarily longer term positioning, right? So that's the difference. Okay. AUD, we can see pretty much strong buying here, 81% of that range. Right. And so yeah, we can see the New Zealand dollar as well, pretty short as well, right? We're seeing definitely more positioning, favoring the Kiwi side, crowded short, right? Second percentile, euros at the fourth percentile. The JPY isn't like the most extreme short, right? But we have definitely seen a lot more shorts on this, right? It's just that it's not, I guess, extreme in that case, not the most extreme. But regardless, if we take a look at the Australian front, we can see definitely a little bit more bullish coming in on the Australian front. We can see that the macro fundamentals, if you just look at this table, which is probably a lot easier for me to just kind of go through it, we're seeing pretty much bullish across the board. Okay, from consumer PMIs, growth, labor, inflation, and consumer readings came out really bullish today, which really drove the Australian dollar a lot higher, which will then pressure the RBA probably to hold rates and maybe hike depending on the situation, right? So um but yeah, we can see Kiwi has been sort of decent as well, but we can see some weakness in PMI data, but overall pretty neutral, I would say. We can take a look at the overview here today, and we can see that, yeah, AUD is pretty much getting a pretty strong reading of 65. Swiss franc is getting a pretty bearish reading. Euro is getting a pretty bullish reading. CAD bullish. CAD has been doing pretty decent as well. Pound has actually seen a pretty decent miss on the job side, so that's going to put some pressure on the pound. US dollar is also pretty neutral. NZD is neutral. Mexican is also neutral. So I mean, right now what I'm focusing on is definitely AUD and Euro. CAD also possibly, especially once we start to see a little bit of rebound on the Brent and WTI front. So I think there's some possible move on the CAD. We're actually seeing some pretty decent data coming out recently, as you can see. If I just take out this, we can see growth, PMIs, consumers started to kick back, started to strengthen a little bit, especially the jobs front. We can see that unemployment change at 75.1K, huge surprise. Manufacturing PMI is basically back on the map. Services PMI is starting to increase again. Wage growth, not the best, but PPI also started to weaken a little bit. But CPI has started to increase as well, right? So we are kind of getting like a bit of that mixed data, but the employment change and the manufacturing PMI is definitely going to put some pressure on the CAD to probably hold rates up, maybe hike. really depends. But what we know is that when we take a look at rates for CAD, majority of the market is kind of just not really expecting any hikes. Pretty much hold for the next meeting. Euro, they're expecting at least a 93.6% chance of a hike come September. So I think that's also one of the reasons why I'm a little bit more bullish on the Euro front. US dollar pretty much on hold. Kind of hit and miss here. Swiss franc, there's nothing much there. AUD as well, 77.6% on hold. So Kiwi as well, 100%. Oh, 100% hike in September. Excuse me. Sorry. So everyone's sort of pricing that in, and I think that's why we've been seeing New Zealand dollar really strengthen here. When we started to see some weakness in the US dollar, Kiwi has just been really pushing a lot higher here. So definitely, those who have managed to caught that move, awesome, because it's a beautiful move. So yeah, but this is pretty much priced in at this point. And yeah, so I mean, ultimately, that's kind of what I've been looking at so far. I hope that kind of gives you some idea of what we see. What I would say is that seasonality wise, I mean, this is based on the US dollar, but if we take a look at the seasonality chart, those who trade NASDAQ, we're probably going to see some chop, especially with midterms coming around. I don't think we're going to get really anything or crazy moves on that. And we can take a little bit on the currency side as well. We can take a look at that. Where is US dollar? US dollar, pretty much, yeah, no, I mean, just not much going on. Pretty much going to be chopping around before September, and I believe stocks will be more towards October. That's when things start to kick back again. All right, so I think there'll be a little bit of kind of that lack of setups soon, I would say, and just be aware of that. Be a little bit more selective on what you're looking at. Depending on how you want to view that, how you guys want to judge that. If you talk about plays that I'm possibly looking at, I am looking at some plays on the AUD Swiss franc front. I still think there's some move there. Euro Swiss franc for sure. USD CAD as well. It's not here in the scanner, but I think USD CAD has some potential, right? We started to see some shifts there. We can see that the CAD is starting to get a little bit more of a bullish reading, but overall bias is still neutral according to the terminal. But we can definitely see that overall we're starting to get a little bit of that CAD strength come back on the table, right? So I think Bank Research has also been a little bit more bearish on the dollar. Rachel Contrarian, so they're a little bit more bullish dollar, which is great for CAD. CAD is also pretty much at extreme shorts, I believe. Let me try to just double check on that. Where is CAD? Yeah, pretty crowded short as well. Let's go back to the where was I? Okay. Hold on. Let me go back to USD CAD. Yeah, so but overall, yeah, I mean central banks are still more bullish on the dollar. COT level is still bullish on the dollar, COT floor as well. But I think we could possibly get a squeeze, possibly. Central bank, I think it's pretty valid. I think, yeah, I mean CAD doesn't have the higher interest rate here. You can see if we go to rates, we will be able to see that the CAD is currently at RB BOC, excuse me, 2.25%. The Fed is at 3.75%. So there's a pretty wide gap there. Definitely. But ultimately, I think there is some opportunity still. For potential shifts, I wouldn't be super I wouldn't be super confident in it. Just want to just take it slow and see if we can get some price action. But markets have already sort of pricing that in, and we can see that in USD CAD, right? We're just been selling off on the US dollar, and I think there's possibly a pullback we can get in. I'll talk a little bit again, maybe in a new video of what I'm looking at and where I would like to enter. But I think that, yeah, we're seeing some weak fundamentals. Bank Research starting to go a little bit more bearish, retail contrarian as well. It's just that we have that COT sort of flow and level, and as well as the central bank still kind of holding bullish. That's why we're getting sort of that neutral reading, right? But all of the times, what I would say is that markets are going to react first before a lot of these things start to pop out. So if you start to see US dollar starting to take that sell off, or well, what we can say is that markets are expecting probably more dollar bearish trend, right? And yeah, so I don't think it's necessarily a bad thing. We don't want to just follow every signal, right? We want to understand, and we want to have our own plays as well. And so I kind of go back and forth, right? If I have a pretty strong narrative on why I think something's gonna fall, then I'll probably just trade it based off that rather than just following the scan all the time. So yeah, in any case, all right, thanks for watching, guys. Cheers, and check out our new video soon, right?